My biggest advice to my sellers is if you can afford to wait, don't cut your price. If you know you're priced right. Hey there, everyone. Jamie here with Sell for 1%, joined as usual by the same 1% gang, Dave Barlow and Jason Barlow. And we are joined by Rich Sircone at Equitable Mortgage here today on 12/12/24 to talk about interest rates and what's going on in the market. So, Rich, if you want to take it away and let us know what we're seeing. I know CPI and all that stuff is until next week, but
we had CPI yesterday, and we found James Day.
Well, the Fed meets next week, right?
The Fed meets next week, I believe. Yes. So the takeaway from CPI and PPI is we have inflation. Inflation is back. The prices
seriously showed back up.
Yeah. Yeah, funny how it just sort of happened here at the end of the year, but
oh boy.
But we are seeing hotter numbers, and the 10-year Treasury is pushing over 430 right now. It was at one point down in the 350 range back when rates were lower. So we're almost 80 basis points higher than where we were not that long ago, and mortgage rates have followed with that. The feeling right now is that the Fed is going to lower. The economists feel 89% of the economists believe the Fed will lower rates next week or the next meeting, whatever that is. But the overall feeling is that the Fed is not lowering rates really to combat a slow economy. They are lowering rates to get themselves to a more even stance. And then next year, they may lower rates one more time at the beginning of next year. And then it's going to be pause, and let's just see what happens with the new administration, all the changes that are being made. So for that reason, again, I tell you always that the mortgage market is forward thinking. And the forward thinking right now is that as we move into the crux of 2025, we don't know what is going to happen yet. And consequently, we are seeing an uncertain market, and we're seeing higher interest rates on mortgages. In response to that, we just don't really know what the new administration means to interest rates, to the economy. And so we're kind of stuck with high sixes, low sevens right now on 30-year fixed mortgages, depending on what your mix of all the different things like loan to value and credit scores are.
So the prediction for next week is a quarter point?
Quarter, I believe, yes. Okay. And then they feel like one more quarter, maybe. I think the quarter point gets them down overall. They lowered a half, then they lowered a quarter, then another quarter would be one full percentage point lower, which is a nice even number. And then they may lower one more time. And again, they had no room to go up anymore after, where they were back in the summer. They had no room. They were just, they had raised rates so aggressively that now getting rates down again, they have room to go back up if they have to. So it's getting the Fed to a more even stance. It's not really in response to economic conditions right now. That's what the market thinks.
So you say interest rates, high sixes, 6 3/4 to 7 1/4 thereabouts, depending on situation.
Yeah. And government loans like FHA and VA, maybe more like 6.5.
Okay.
Yeah, that's where we are.
So do you get the feeling that the government's kind of pushing the government loans maybe?
Well, I think for the overall demand of those loans, they've got to be a little bit lower rate because, as you know, the FHA loans have a little higher costs involved in terms of upfront mortgage insurance, 30-year mortgage insurance. So they're inherently a little less attractive than a conventional. And so if somebody, is kind of on the fence, they're going to take a conventional as opposed to an FHA. So I think the slightly lower rate makes them a little bit more attractive. And then it really makes it attractive if somebody has adverse credit. Like if somebody's got lower I guess 650 or 640 credit score, conventional will really penalize you. You're going to be one of those people that's going to be in the 7.25 to 7.5 range, where you can take an FHA and be in the 6.5 range, because FHA does not penalize you for credit scores.
So what are the income limits on FHA right now alone?
There's no income limits. The change or if you're asking value, the value, it's Dave, I don't have that number on top of my head because it's just coming out, but it's in Central Ohio. It's in the low 500s for a FHA loan now, like 508, something like that. I can look it up if anybody calls me and is interested, but it's in the low 500s, the max loan amount on a FHA loan in Central Ohio. It's by area. If you get into, some of the rural areas of Ohio, it's going to be lower. If you get into some other states, it's going to be lower. But Central Ohio, low 500s for an FHA loan.
Yeah, because I think a lot of people think FHA loans is for, low income, for lower valued homes. We used to see it quite a bit, on the $100,000-$200,000 houses and, that kind of stuff. But it's really more mainstream in today's world, isn't it?
It is. I do a lot of FHA loans. And like I said, depending on your circumstance, and that's why you need to talk to a good mortgage banker, depending on, where you are with your credit scores and whatnot. You may be better served to have an FHA loan than to have a conventional loan. And a lot of that stuff just matters on where you fall on the grid. So it's something that is individual that needs to be discussed.
I've had a couple of quad fourplexes, duplexes, and I've seen some FHA loans on these they're owner occupied, so they're not investment properties, but you can get an FHA loan on a duplex and or a quad and get a pretty decent rate and not have to come up with a conventional loan. You're going to put 20% down on a property like that. FHA, you're 3.5%.
You can buy a quad, a 4-unit, as long as you're going to live in one of the units. One of them has to be your home. And as long as you're doing that, you can buy that house for as little as 3.5% down. And I don't have these numbers on my head either, but as you move up, like the single family is the low 500 limit. But as you go to a duplex, it's higher. And as you go to a quad, it's even higher. And maybe next week I can have it. So you're not limited to 508. It goes up as you go to a higher a number of units, up to 4 units.
And do you know off the top of your head that you had to live there for 1 year, 2 years, and then you can still keep the loan and move on to something else? Or if you ever move out 5-10 years, you have to convert to something different?
You do not have to convert if you, in the future, decide that you need to move on for family reasons. You need to buy a bigger home. Now, what the litmus test is basically what your true intention is when you're buying that home. If you're truly intending to live there, and in an indefinite period of time, it's not like only a year or you're penalized, but there can't be a scheme where you're just going to live there for a month and then move out. FHA is going to catch up with you, and that's actually a mortgage fraud. It could be jail time for something like that. But as long as you, in all good intention, decide to live there, and that's where you're going to live, and then if things change in your life, even if it's a few months later, let's say for instance somebody decides to move in there and then all of a sudden finds out that their wife is pregnant and they're going to have a baby and they don't have enough bedrooms and they need to move. There's reasons why you could move in a shorter period of time in a year. But again, it's meant to really gauge what is your true intention with that.
All right. Good information. Jada Bomb, on the sell side listings, we are middle of December. Typically, this is kind of a slow time of the year, but I can tell you from my vantage point, I'm fairly busy.
Well, then why don't you talk about the sellers then, since you're all busy?
I don't have time to. That's why I'm leaving it up to you.
With the, yeah, I want to talk about the other thing too. So I don't know what I should do first. I guess I'm not allowed to talk about other things. Um, with the sellers that I'm dealing with, there's no rhyme or reason on some of this. I've got, when I say that, I have some listings that are underpriced and they're slow. Some listings are a little bit overpriced and they're getting decent traction. The biggest challenge for sellers right now is that the showing counts are off. The region for the Midwest is off on showings that remain, still today. But anyone who is out looking right now in the cold and the dark, they're serious. They're not out messing around and kick tires. And so, what I'm experiencing is, a lot of my listings, are selling just kind of one by one. It's not like it was in the spring where you have, 40 showings and 10 offers, but things are not bad at all. Looking, at the market, I'm looking at year over year. This is for December 1st through today, December 12th. Total active listings were about 2018, 2019 levels pre-COVID. Inventory supply is up 35%. New listings are up, and for this 2-week time period, are up 17%. So for the inventory to be up, double that things are taking a little bit longer to sell. Now, the cool part is we've sold the exact same number of homes and prices are up 8%. And so prices all year long have been tracking around 5-6%. And so kind of what, Dad is saying, and I'm feeling the same thing, is that December normally is slow. December's not been bad at all. December's been pretty strong. I've had one seller in particular, a couple of them, that said, "Hey, let's talk about taking it off the market until the spring." I talked to him and was like, "Hey, anyone who's looking is going to be serious." And lo and behold, showing comes through and damn near a full price offer. So to me, it pays to be out there as a seller, to be surfing. And then when we get to 2025, we're all kind of hoping Q1 is going to be off the hook. They've been clear out some of this inventory. But really, prices are up. My biggest advice to my sellers is, if you can afford to wait, don't cut your price. If you're priced right, I don't think that price is why it's not selling. It's more time of year. And again, you look at this, prices are up 8%. So, if you're priced in line, hold the line. If you're overpriced or your house is in bad condition, you need to get in the line quickly. But market's pretty good for sellers.
Jay Marinsky, same question for buyers.
Yeah, just had a closing here this morning with a buyer, and I think that they got a decent rate. Rates are coming down a little bit here with the news of inflation coming back. You have much more choice, I think, as a buyer, than in years past. I don't think it's a bad time to buy at all. I do think that you are going to get a little more house for your money and a little less competition this time of year, definitely. So I think it is a good time to buy. I do think things continue to appreciate here as more homes come off the market and less inventory is available. So definitely, I think a good time to buy as well.
One of the things that we have seen historically, and nothing's ever absolute, but generally from the first of the year until about the first week of April, we see a decline in listings. So basically, a lot of home sellers out there, they had the same mindset. Oh, well, we'll just wait until the spring market, April, May, June, to put our house on the market. But you still have buyers coming into the market in January, February, and March. And so historically, our tracking has always, I won't say always, most of the time shows the number of listings decreasing until we get to that fourth week of March, first week of April. Then we start to see listings increase. And so I'm going to be curious to see how that tracks this year. I think that, what we're going to end up seeing, and we can talk more next week, bring your predictions for 2025. So Jay, do your research before you get on screen, and then you'll be ready to go. But I think what you're going to see is home prices may not increase as quickly even as this year. There was a slowdown this year because I think we've kind of peaked to a certain extent. If we can get interest rates down, Rich, and I'd like for you to make a call to your buddy Jerry down in Washington and say, hey,
I'm going to do that as soon as we hang up here.
Yeah, we need some help here. If we can get those interest rates down to the low sixes and maybe even a little bit lower, which I'm hopeful with the new administration that's what we're going to see, that the spring market could be off the hook for us. So, and I figure for myself, I got about another 3 or 4 years of doing this, and then I'm going to retire and turn it over to Jay and Jamie, and you guys just send me a check. So everybody get ready.
Don't I get a check too?
You're in the wrong business.
Oh, shoot.
Yeah. You have to have a couple of boys that you have talked into getting into the same business as you. It's worked out well. So the scheme is coming together. Watching a series on HBO called The Penguin, and he's pretty dastardly. So when I just said that the scheme, I was like,
Based on the Batman character.
There you go. There you go. So, all right, Jay Marinsky.
You want me to wrap it up here?
Jack.
Well, Rich, thank you for all the information here that you have given us, and I hope our listeners have learned a thing or two as well. I think the market will be heating up here start of next year, and if you're looking to buy, now might be a perfect time to buy. So same with selling. Feel free to give us a call anytime here at Sell for 1%. And if you're looking to refi or get pre-approved, give Rich a call at Equitable Finance. All the information is here on the screen. Thanks, guys.
Thank you.